Good morning, everyone. Microphone check, screen check. Looks like everything is working correctly here. Good, good, good. Yeah, perfect. Good morning, SSFTG family. Good morning, good morning. Hey, laddie, how's it going? Everybody else so far, good morning, good morning. I hope you all had a chance to rest up, get ready for the day ahead, all that fun stuff. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. Very important to go through and understand everything that is inside there. And then also, just a quick note for you all before we jump on in today. If you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be given at the of what I may be talking about at any given moment. Jeez. I may have to get my my caffeine going a little bit quicker this morning. Yikes. How's it going, Steven? I just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family in one way, shape, or another. Of course, if you aren't a member yet, there are a ton of different options to check out if you are looking to figure out what it is that we're doing every day and how we're doing it. One of the easiest ways is to first start off as joining as a YouTube member, and that kind of gets you in sort of behind the scenes in the chat room, in the YouTube community boards, and just kind of seeing what's going on from that perspective. Of course, if you want to understand how we're doing everything and all of that fun stuff, check out the Day Trading Academy along with everything else that we have over at SSFTG. So whether this is the first time or the 1000th, good morning and welcome. I hope you're all ready to rock and roll alongside me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, take a look at what's all going on so far. Don't forget to grab your morning DP levels. Those are posted for you in the Major 7. NASDAQ has a big old crude, euro, Bitcoin, and Ethereum. Ooh, that one felt good too. We got those shoes laced up nice and tight. Relatively decent movement, but as far as the news calendar is concerned, there's a couple things. I mean, as far as... oh, I forgot to put the API on there. I thought I posted it on there, but I guess I forgot. Anyway, we'll take a look at that in a second. But first off, this morning we had the ADP non-farm employment that came out at a... well, the forecast was 428,000. And then later today, the next news announcement is a crude oil inventories. That forecast is a negative 0.418. What a piddly little report there. Of course, when we're looking at the inventories, we want to take into account a couple things. First off, one of the big things is not just the inventories in and of themselves, but going back to the day prior and looking at the API. Because the API will give us a big heads up in terms of what to expect for the market going forward. Their expectations of 0.951. And if we're looking at today, their forecast is a negative 0.4. Yesterday's API was negative 0.3. It came out at a negative or a positive 9. I mean, everything is kind of suggesting that we should have a slight build here today, and it'll be slightly bearish with the way that things are lining up. There's not really any other news or anything else going on, so. That's really about all there is. So I guess let's rock and roll. Drop this stuff out of the way. Take a look at what's going on the NASDAQ and start off there. Now, as far as the NASDAQ is concerned and the overall index markets as a whole, they're still trending to the downside. The market hasn't stopped going to the downside. We can see realistically that this was, I mean, initially it tried being a channel. Looks like it kind of grew up into a wider channel, and that wider channel maybe multi-tiered, maybe not. To me, this looks a bit more like an expanding megaphone pattern going off these most recent lows. It fits a lot better. It fits the highs a lot better. It makes a lot more sense. And that would also potentially explain why we're seeing this higher low momentum. If we're getting a higher low right here, especially given how many times the sellers got obliterated, this makes sense, right? I know this looks incredibly strong to the downside, but if the bulls are going to take it back up, and remember, they're low probability. We're talking low risk, massive reward type trade here. But if traders are going to be looking for the continuation up, what better spot than a pullback down to these low 420s? The low 420s, the POC was at 414. I mean, look how close that came. So there's a lot of support coming in down here if the bulls are going to take it, because they know that realistically, if they're going to be buying on the lows, they don't have to risk a whole lot, relatively speaking, for the new bottom, right? If it breaks a new low, then it invalidates the entire reason for the trade. But the upside, I mean, 3-to-1, it fits a 5-to-1 just back to settlement. So, I mean, a lot of traders are definitely going to be swing longing into this with an understanding that it's going to be low probability. The trend is still down, right? It's still making lower lows, lower highs. We have to understand what's going on in, where we are at the moment. One of the easiest ways is just to go backward a little bit from the most recent major peak. Say, all right, wave 1, wave 2, wave 3, wave 4. What a disgusting wave 4. Jeez. They finally did make their way down to that quick little low. And then from there, obviously, we could expand this out a little bit further now that we have the benefit of hindsight. But as it stands, all of these pullbacks really weren't that decisive. I mean, the only one that really fits would be back here. And that gives us 1, 2, 3, 4, 5. And then we start continuing back to the downside. So as far as a corrective phase, this just seems like a rolling correction. Right? I mean, that's really all this is. So, if that's the case, then the bulls have some serious problems. They're going to have some issues. We've got falling resistance. We've got settlement back up at the top. There's a lot of stuff hanging out at the highs ready to push back on this. So, part of me is like, yes, we've got a possible bull day. I would agree, yeah. But there's the other side of me. It's like, well, yeah, that's a tough one. Hang on 1 second, sorry. Someone's having an issue. That text is behind my microphone. I'm sure I slaughtered the spelling on that. That's good enough. I'm not too concerned about it right now. Time of day is of the essence here. So as far as the Nasdaq is concerned, we've got a lot of higher low momentum. Bulls are definitely trying, but well, this is starting to make me think this may be a continuation down for another breakdown. If the bulls lose their ground underneath 14, it's game over. Like, there's what else is there? Then you got to start zooming out to the dailies and all that. Over on the S&P, it's a similar situation. More recently, if we're coming off of the highs, we've got the first wave 1, wave 2, incredibly strong wave 3, disgusting wave 4, which fits the bill, into wave 5. The S&P is one of the cleanest setups I think you can ask for, as far as comparatively, especially to the Nasdaq. Like, the Nasdaq doesn't even know what planet it's on compared to the S&P. This thing's just super straightforward. And then from here, you don't even need to draw the lines on there. As long as you have eyes, you can see it. You've got a nice little wedge. So, I mean, everything is lining up pretty nicely for... Basically, what I'm looking for is a continuation pop back up to the top of 4, and then to see what they want to do. And when I say the top of 4, I'm talking about right here. Let me use yellow so you can actually see it. They'd be back at around like 43.90. That's the level that sellers are going to be looking for a continuation. Now, as far as a wave structure is concerned, anything inside of wave 4 is where they're going to be looking to try to get it to go. But a trap above these most recent swing highs is a phenomenal zone to try to get that low probability, low risk, massive reward type scenario going on here, where traders don't have to risk that much for reward moves all the way back down to lows and potentially further. Lots and lots of potential for the sellers to try to drive this down off of those highs. Where it stands right now, I mean, really, it hasn't given us a whole lot to work with. If we take this whole leg from the top to the bottom and look at what's gone on structurally, it's probably going to be right in the middle, right? That's probably why those highs are there. Yep. 43.65 or so is the POC, and we've been wedging lower high underneath that. It's also been going higher low from the base. Very interesting to see how this one's going to turn out. Man, I would love to see that trap above the highs. Ooh. Over on gold. Gold, man. What a mess. This thing looks like an absolute disaster piece. We had that initial rally up, and again, the assumption would be that sellers would be looking for the continuation in the short term. But if we look at what the volume actually did, well, like, nobody showed up to the party. They started showing up a little bit up here, and maybe the lower highs, they finally got it going. But they couldn't make a new low, and the market went screaming all the way through there. So those shorts got absolutely obliterated. And if we go up to the next new high, right, first off, let's catalog where this is. The last POC was down... Oh, come on, mouse. Oh, for God's sake. There we go. Close enough. Right around that area, then the next high after they pulsed back up to the top, understandably, again, was that POC that they designed inside there for the sellers to try to create the move down. But then it just fell apart. Right? The shorts got absolutely obliterated. So with this momentum to the upside, it's likely that they didn't do anything until this congestion in here. And then we've got the POC right there. Now, if we're looking at those three different zones as an area of interest, and we're taking them together, so 1756.6, 1731.8, and 1725 even, divided by the three total positions would be 1737.8. So 1737.8 is the current break even without going any further, right? So this is the break-even point that traders are going to be looking for over here. Now, as the market continues, and we get a little bit more momentum, we pulse back up to another new high, and we get another POC, which means that we can modify this calculation. We already know the number, 5213.4. So 5213.4 plus, which one did I just add? 1758.7 divided by 4 now. 1743, which is right there. Now, we get a really, really nice deep dip to the downside, but we know what that is. That's just a bullish continuation. Wave 1, Wave 2, Wave 3, Wave 4, Wave 5. This is the trap at the lows of Wave 4. Perfect continuation. I mean, it lines up beautifully. It's hard to ignore that one. But once we get a continuation back to the upside, come on, chart, we have another POC. Now, it didn't change by much, but it is to be noted that it's there at 17, and I think that's just because I drew it in the wrong spot, so I'll move mine down. But again, because they're so close, it doesn't really change much. If we go a little bit further forward, see if anything changes, nothing changes. We get a little bit more back and forth, no new POCs. Now that one changed. So 100%, that one definitely added another one at 58. Okay, so we've got another one, 6972.1 plus 1758 divided by, how many are we at now? 1, 2, 3, 4, 5. Right, last one was divided by 4. This, yeah, divided by 5. 1746 is the break-even point. If you would like to know why the market turned there and nowhere else, you have your answer. Magic. So the shorts that were stuck, that got absolutely train wrecked, still made their way out unscathed. Rotten peckers. The effectiveness of proper management, right? Or just really big pockets. Either way, we know that the shorts got out in this last dip down. So the bulls have every right in the planet to try to rotate this back up to the highs. The only thing really that we have to work with if we continue this from the top all the way down, assuming that bulls are now taking over, we've got to get back above this most recent POC. That's the power shift. The sellers are still in control at the moment, but if they can get back above that a little bit more, maybe even break above this last swing, it's game time. Over on crude oil, man, finally pulling back, I guess. I don't know. Jeez, oh Pete's. As far as the beginning of the week, I guess, since, sure, we'll just start there. The market has not really stopped going higher, but there were some nice little pullbacks inside of that. If we're looking at the first little pullback of the week before it broke the major highs, we were pulling back to L3s, higher lows with an L1, a little bit of confusion. But when we broke out above the highs, that breakout was incredibly strong, and the next pullback couldn't even make its way to an L1. Look how aggressively they were, like, no. Nope, algos aren't getting this one. No. Buyers bought that thing up like it was going out of style. So with that aggression to the upside, what do we expect to see? An L1? No. Usually when you have this kind of momentum, they're not going to let the L1s happen. The algos are not in control. This is just sheer, pure FOMO, right? So what happens when we get back to the L1? Are we going to bounce? No. Of course not. This is the same mentality that we have on every deeper pullback on any large trend. It's going to get the deeper dip. It's going to trap all of the FOMO buyers up at the top, trying to buy this is the pullback this time around, right? They get slam-jammed was what was going through my head, but slam-junked. I like that too. And then we get the deeper dive into the next point of interest, which in this case would be the L2. We get this over and over and over and over and over and over again. Whatever the structure is, they always have that deeper pullback mentality when it finally does. We're finally here. It's no surprise seeing the L1s getting steamrolled, right? Because they don't have any right to be buying it up there. It's FOMO. Now, if it works, congrats, great job, great success. That doesn't happen very often. The probability of that's in the low 30s. But buying down here, if you're looking for a 3-to-1, really isn't going to be that much better either way. So it's not to say that you can't be a buyer at the L1. It just makes a lot more sense to wait for the 2 in this case, given the trend and how it's working. Crazy momentum, but it's almost back. 77.60s, that's going to be a hot spot. Over on the euro, still getting obliterated. Thing's just through the floor. At this point, 1 is right around the corner. If we're going from the bottom to the top of the last corrective phase, the market finally lost their. I mean, they didn't even have a chance for the alligator to close its mouth. Like just nothing, gone. Rickrolled the bulls and slammed all the way down to the lows once again. I mean, this overall structure, we've been talking about how big this is. This is a daily structure that's got potential for monstrous momentum lower. By no means am I expecting the bulls to win any fight anytime soon. But when we do get a corrective phase at some point, because we will, that's how markets work, it's going to be much more beneficial to let the bulls play out their phase. Whether it's a 5-wave structure or whatever, but let them get it out of their system first, and then look to re-enter the shorts. This trend is heavily exhausted, but that's just in the short term. It's got a lot of room to go. Holy, what the hell? Crypto just went friggin' crazy. Woo! Holy moly, all right. Wait a minute now. I'm drooling, can you hear it? Bitcoin just rocketed to the upside, 55,000 thrusters, full boost. Here we go. Over on Ethereum, we've got more continuation to the upside, massive break above the highs. Wow. Holy cow, we've got some huge continuation now. That took me by surprise. I wasn't expecting to flip my chart and see that. Jeez. All right, well, crypto is off to the races, that's for sure. Hello, charts? Uh-oh. I don't have crypto on this workspace. Why is it lagging? There we go. Jeez, that doesn't give me the warm fuzzies. I don't like my charts lagging like that, but all right, anyway. As far as the continuation of the downside goes, I mean, everything that's been going on what a lot of traders would anticipate to be a pullback is turning out to be maybe more of a gap fill. We'll see what they can make happen, but in the near term, we've got a nice continuation back to the upside at least. This is going to be a big gap down. Basically, all of yesterday totally wiped out. Sorry, bulls. Now, again, this dip does have the swing long potential going for it, but man alive, Bitcoin just went absolutely bonkers. Wow. They're really, that's kind of frustrating. I wanted a little bit of a deeper dip on some of these, but anyway, we've got a Bitcoin continuation to the upside, and with this continuation up, not only are we breaking some of these previous structures, but if we zoom out to something like a daily, we're starting to really climb up here. Here's my concern, okay? This is the same thing that happened last time, all right? Now, I don't know if y'all remember that, but it looked like it was really strong after they had a huge top that they put in. And then the market went really close. Got up to that inside swing high. And then fell apart 70%. So, if we go back to what I'm talking about here, if we're looking over on Bitcoin, earlier in the 2018s, we had that initial dive down. It looked really solid for the continuation up, and they also did this later on, and drove all the way back down, went sideways, continued back up. This is the reference point that I'm talking about over here, where it looked like the market was taking over massive control. And then it collapsed all the way from 13,970, 75% to the lows just underneath 4,000. That's my concern right now. Okay, so if I look over here and I see this formation going on, it's concerning. What I want to do is look back. We still got about 8 minutes yet. If we look back at this initial point, we had the POC, which was heavily chopped up in the middle there. Then we have that next rally to the upside. So if we're looking at that next pulse to the upside, they built in a massively bottom-weighted POC down in the 4,000. That's really all that next pullback was. Just as a side note, it was just a value pullback for longs to reload in the 4Ks. So if we're looking at that with that same mentality, what does this look like, right? Does this look like the same thing over here? Well, we measure from the top to the bottom, and we have a really fairly decent bottom-weighted POC initially. If we go back over here, nice little bottom-weighted POC. The market's bouncing pretty nicely off of it, though. And comparatively, can we say that this is the same thing to what we're seeing over here? Maybe. You know, but it's definitely stretched into a different perspective. This looks like it took that and stretched it out. So that could very well be the case. And if that is, then we're in for a world of hurt, because we got a heck of a lot more downside movement to go. Then things become even more troublesome, right? You're looking at the top to the initial drop of about 70% to the overall low being about 84%. So if that is where we are, and we're looking at this from a large perspective, a 70% drop would put us right at about 20,000. I don't think that's a coincidence. I don't believe in coincidences. That's not something that happens in the markets. The fact that they broke out of 20,000 so aggressively and now a 70% value pullback is directly on top of 70,000. I mean, that looks pretty juicy. And if you look at the 85% pullback a little bit lower, that would put it sub 10,000s. That's right back into where we had the previous major volume node. Go from the top all the way down to the bottom. What would that be? That would be one of the largest value pullbacks in history. Is what that would be. But still in the realm of the norm when it comes to crypto. Understand the risks of the markets you're trading. It's looking really good right now. I'm just saying. I've got some fears looming in the back of my head right now if they can't start breaking through the highs. If we break an all-time high again, totally different perspective, right? Bitcoin up to 100,000 by the end of the year. But where it is now, we need that little bit of extra proof. Got about 5 minutes, 5.5 minutes until the open or so, right around the corner. The euro continues to get absolutely thrashed to the downside. We've got maybe a nice little flag working its way lower. I mean, the sellers are getting just, man, they are being treated like royalty right now on the shorts for the or the euro. Got a nice little back and forth going on with crude oil going, I mean, relatively decent drive lower. Taking back the majority of what happened, really, the whole previous day. I'm curious, did sellers at least get their scalp? They must have, right? Yeah, I was going to say, they had to have gotten their scalp. They did. That was the low. Alright, now we're breaking down a little bit further, see what they've got in store. Again, remember the bigger picture here. The bigger picture, we've got NASDAQ, which is still technically bearish, but trying to maintain a bullish reversal. Same goes for the S&P. Gold is in a very touchy spot right now on top of this big POC cluster. Really funky spot to be in. This probably isn't going to help it either if we go back to the next major swing. No, they just made it worse. Okay, crap. Gold's going to need a bit more proof here. Crude oil waiting for a slightly deeper pullback down into like the 77.60s. Then we've definitely got some interest. Put that down there. There we go. Can't believe crude oil didn't aim for the $80 mark. Now, they pulled the normal Walmart special, $79.99.99. What'd they get up to? $79.77? Yeah. They're probably not done, but, you know. We'll see what they want to do. NASDAQ and the S&P, next point of volatility is 928. You know what? Honestly, this gap on the indexes is going to be so incredibly large that I'm just not really going to even care that it's there, and just mark where the gap is. 42.94 is where the gap is on the S&P. Is where it is on the NASDAQ. And that way, we can go into 24/7, and the chart's not going to look absolutely insane when it opens up. There we go. Honestly, the euro is just such a waste of time right now. I would rather just have crypto over here, if I'm totally honest. Go Shiba! Woohoo! Hey, Seven, how's it going? Ace, Steven, Bram, Letty, everyone else so far? Good morning, welcome, welcome. The markets are rocking and rolling right now. Especially on the crypto side, things going freaking crazy. Why is my list not loading? Is it that bogged down that it doesn't even know what's happening? Poor TradingView. TradingView can't even keep up. Like, bro, I don't even know what's happening. The market's moving? Too much. They're taking notes from Coinbase now. Uh-oh. Yours didn't load for a couple seconds too? Alright. Yeah, they're probably just overloaded. I mean, to be fair, it's not like there's just a little bit of volatility coming in. So, I'll give it to him. That's why I swing trade crypto still. I haven't found a platform decent enough to intraday scalp aside from, you know, like things like Binance and Femex. And even then, there's still some pretty wicked slippage when it gets crazy. Got a lot of good content to go. Yeah, for sure. There's a ton of stuff. By the way, welcome. It's been a while. Good to see you, my friend. There's a lot. There's about 20 hours of video. 21 if you include the VIP private reserve. So just a bit. Yeah, not yet. Not yet. I'm on the same page with you, Bram. I tried scalping it a couple times. It's getting there, though, with this excess volatility. Now the problem is that when the volatility comes in, the freaking exchanges crash. You know, like, I got to be able to have faith in the system. You know? I mean, at least when NinjaTrader crashes, it's when the rest of the world is, too. You know, like, oh, I understand that. Also, not very handy, but it happens at least few and far between. Like, man, you whisper an ounce of volatility and Coinbase huddles in a corner and starts crying. Like, oh no, not again. He puts the lotion on its skin. It just can't handle it. Like, it blows my mind how they're talking about, like, going public and all, like, all these, and they can't even handle the volatility. Neither can Robinhood, though, so, I mean, it's not like it's anything new. Right, what was the latest email that I just saw from Robinhood? Now introducing 24/7 technical support. Like, bro, what is this, the 90s? What do you mean 24/7 technical support? That should have been there, like, years ago. When I saw that email, I was like, wow, are we just finding out that mail exists too? Like, what is this? Unbelievable. That they're trying to make that a big... Oh. Welcome to upgrading to the 90s. Hope to see you in the 2Ks soon. Jeez. Anyway, mini rant over. Just the unreliability of these exchanges and brokerages these days is just ridiculous. Absolutely disappointing. But who else do you go to? You know, like, what are the other options? Yeah, Robinhood now has phones. Quick, send everyone an email. It's like, oh, really? You finally outsourced some tech support, huh? Good job. That blew my mind when I saw that email. Yeah, seriously, time to pick up those old stocks back in Nokia again. Buy NOK. Got those brick phones coming back, baby. I mean, at least they worked. You could practically nuke those things and they'd just totally be, just dust off the top of it. They'd be alright. Market's not really doing a whole lot so far, obviously. Kodak will return. Hey, wasn't Kodak going to get into crypto for a minute? And then they kind of backed out, and I don't know what happened with that. That was in that whole... that was the same when the coffee company went into crypto. They stuck it out, though. Talk about a pivot. It'd be like McDonald's getting into, like, car sales. The McTruck. Oh, God. Now that I've spoken it, it has to become existence. That's how the universe works, right? Really strong continuation to the upside so far, out of the gates. If we look at the overall perspective here, this strong movement is kind of put back into perspective. We're just gonna have to start scalping the inside volatility here. There's not a whole lot going on that's allowing much. Nice strong first bull bar to start the day off on the NASDAQ. That creates the POC at 50. And then the S&P at 4309. So if those are longs, which right now I have to assume they are, we're closing above them. They're high. I mean, it's doing what it needs to do. Then we can kind of figure out where their upside objectives are going to be. Scalper's objective, just eyeballing it, we're already through that. So then, okay. Next target then is going to be a 2-to-1. It's still got some open doors. 27.25. NASDAQ has some room for it to open up. Same for the S&P. Oh no, I didn't mean to move that. Oh, actually, it doesn't matter if I move that one. I got the gap fill on. Look at the gap fill on the S&P down at 94 to the tick. Whatever, it's out of their system. Very nice continuation phase to the upside. How do you attach the current price to the horizontal line? That's actually an indicator. That's the label horizontal lines bar alerts. It's some crazy name. Yeah, GOM label horiz lines. It's in the you can download it in a lot of different places actually, but it's also in the Academy. They've got it on NinjaTrader forums. It's on Futures.io if you've got a membership there. Futures.io will, by the way, forever be Big Mike's to me. I don't care who I'm talking to. That'll always be the first thing that comes to mind when I think about that. More continuation momentum to the upside. Not really much of a pullback, although the S&P is seeing a little bit of a dip. Got 2 minutes left on the candle. Tried picking it up on the bid, didn't get a fill at 11.25. I mean, there's that too. Alright, Bull's looking for a bit more continuation back to the upside. If we can get a bit more continuation up to like the 1350s, that would be really the first objective. We really only had a chance to get the one. Nice continuation pulse to the upside for a scalp. Like I said, I only had a chance to get the one, but there is, I mean, there is room still to the upside. I had a hard time even getting that one. So, I'll take it. very, very strong continuation on the NASDAQ. Compared to the S&P, I mean, it's still good looking, but the NASDAQ's got some serious bars here. Like, holy crap. It's got monster potential, still developing, but potential candle gapping to the upside. Not really any on the S&P. Although, I tell you, if the S&P can dig down underneath that last candle down into the 10s, that would be a zone of interest. Not really much else going on. NASDAQ trying to pull back as well. Although, I mean, really, any pullback on the NASDAQ of substance is going to be down to like the 60s or even the upper 50s. The S&P missed the entry points by a point. It's fantastic. All right, I'm going to go one further then. 975. I'd rather see it fill in the candle gap that they left behind then. Really? Okay, S&P. Okay, S&P. Out and done for the day. Nice job, Ace. Great work. Wow. Ooh, a lot of stops down there. A lot of stops down there. Otherwise, it wouldn't have been that easy to get in. There's a lot of longs that got taken out underneath that low, and they're real disappointed right now. Let's see if they can FOMO back in. Once again, only had a chance for one. Given how much FOMO is going to take place here, I'm looking for a bit higher. I'd like them to rotate back up towards the top. NASDAQ still pushing. All right, nice little continuation, pulse back to the upside. Sheesh. Once again, only had a chance to get one. A lot of stops down there. A lot of longs are real upset right now. They just handed that over. We've got a continuation phase, and I mean, look at the candle gapping on the NASDAQ right now. That's crazy. Oh, crude oil. Crude oil's dipping into the L2. And 1 second. Let me swap this to L2, swap that to all charts. Alright, we're in the zone. We'll see what crude wants to do. Monstrous candle gapping to the upside on the NASDAQ. Like, just huge. Upside objectives at the moment, that's way through settlement, too. That would be up at 86.50 or so. Make this thick. POC resting back as well. Awesome, Steven. Great work. Yeah, for sure, Maurice. You know, you could coder. I want my sell button gone. Yeah, I know, right? Delete it. I mean, speaking of getting rid of your sell buttons, right? Whew. Ooh, man, oh man, oh man, oh man, that thing's spicy. Bitcoin's just a ripping and a rolling. NASDAQ's got a potential zone of interest down in like the lower 90s. There's an extra little pulse in volume in this 80 on 80 as well, which makes it a bit awkward. Oh, there's a lot of volume building up at 16.25. Shiba's at 2,300. Whoo! Lordy, lordy, lordy. Hey, Gango? I hope I said that right. Yeah, that's the NinjaTrader platform. NASDAQ getting a little bit of a dip back here. Nice little pulse for the longs to try to come in off the lows. As far as the zone of interest is concerned, this whole area is going to be a zone of interest. And the NASDAQ, I mean, if they can get back to, like, you know, again, the upper 70s, low 80s, there's still a spot of interest. Didn't get a fill on that last push. Nice push down into the zone of interest. And then again, there's that one little extra one right there. That makes it a really awkward pullback, but they got all of them. Just because it's so far away, I want to make sure that I can keep my eye on it. That's the first area of interest. There we go. Almost. There we go. All right, now I can keep an eye on things. We are filling the gap back a little bit, so the upside objectives narrow in, still above the highs, to about 45.75. The MES POC shifted but the main hasn't shifted yet. Interesting. Oh, filling in the gap a little bit. Hey, Vicky, how's it going? Would this be the same trade as yesterday, right? Effectively, yeah. The same concept, at least. There is a better zone at 71.50, but the market isn't quite getting down into that area. It's still having a tough time. If they start losing through the 70s to 60s, though, might have to modify just a little bit, but it's still in a favorable area as far as probability is concerned. The NASDAQ AOIs are due to the POCs popping out underneath. Are you talking about the highlighted zone? The highlighted zone is due to the candle gap. The candle gap was a lot larger, but it's gotten smaller and smaller since then. It's still open. All right, we did actually make it down into the low 70s. This is the zone that I really like, but I've got to see them pulse back to the upside. Now they have totally filled in the candle gap. So we're going to have to modify a little bit now. Still, again, favorable from the long-term perspective, but not from the whereabouts, I guess, whatever you want to call it, the location that I built my average in from. What are the EMAs utilized? The EMA number is 100% irrelevant. The EMAs that I'm using were literally randomly generated to prove that point. So it's I don't even know what they are. Hang on. Hold on, I'm trying to manage the trade at the same time. Give me a second. What was it? Like one of them was, I think, like 112 or 116 or something like that. Yeah, 116, 34, and 68 are the ones that I'm using. But, I mean, again, it's totally irrelevant, the ones that you use. A moving average is nothing more than an average. It's just how math works. Big reversal back to the downside, a lot heavier than a lot of traders will have been anticipating, myself included. So I'm going to have to work my way through and out of this one when the deeper pullback. As far as location-wise, the latest entries, you'll notice I'm kind of hanging off the gas pedal a little bit. The S&P is breaking out through the lows. The NASDAQ doesn't have that. And the S&P is also still open for a possible hedge to the downside, or basically any short that I want to take. The thing is, with the S&P, we're coming back and kind of retesting the original low of the day. It's a challenging spot. I'm going to eat a little bit of this area because I want to try to drive my average down a little bit. I'm effectively accepting the loss initially so I can get my average in a more favorable location. Where it was beforehand just didn't help me at all. At least with this, I'm underneath. I have to eat a little bit of the loss initially to make it happen, but that's fine. It once again tilts the probability more in my favor. It's like crude oil hit this zone and like nothing happened. It just stopped dead in its tracks. Yeah, if there are zones of interest for options, 100%, I still talk about them. Stocks, crypto, options, I mean, it doesn't really matter what it is. If it moves, I'm going to trade it. Or at least I'm going to look at it. Typically with options, I'm looking at larger swing zones of interest, though. You know, and that's the one thing that we just don't have on the indexes. We haven't had for a couple days now. It's been a couple days since we've had a solid swing, and that's just because, well, we're out of an impulse wave, we're in this really wide corrective phase, and we're in the middle of it most of the times we open up. So, as far as location-wise, I think from a much larger perspective, with a lower risk from that perspective, in the longs with their rewards, you can kind of see the directionality that I'm looking for here. But that direction is low probability at the moment. Got to play it for what it is. Got 10 o'clock right around the corner here. Yeah, another popular EMA would be like a 21, or I don't know. It doesn't really matter. Like I said, you can pick whatever one you want. A moving average is just an average. I actually have a YouTube video that goes over that. Type in like seriously, go to Google. That's what we did. That's where the moving averages came from. A couple years ago, I did an experiment talking about how useless the numbers of moving averages were. Because one of the things that really irks me is people trying to sell packages and stuff because of moving average cross systems and stuff. Like, for real? Anyway, it's so one of the big things that I tried to push back on was that. I was like, okay, we're going to make an entire system utilizing randomly generated moving averages. That's what we did. And I haven't changed them since then. My big thing is having a fast, a medium, and a slow. That gives me directional bias. That's kind of my goal. We got 10 o'clock. Possible candle gapping to the downside on the NASDAQ. So as far as the candle gapping to the downside goes, they've obviously filled in all of the bull gapping. That's done. And now the bear side actually has downside potential to... It's not too... Where'd the other line go? There it is. Move down there. Be back down to like the 88s. S&P couldn't really pull back far enough, but in the nearer term, we are breaking through some of that heavy volume that was building up underneath the lows. So the sellers have a shot to try to really take it from there. That's what they needed to see. We've already got a string of bear bars, and the S&P also has bear candle gapping to the downside. And as far as the bear candle gapping to the downside goes, that has... right there. Whoop. There we go. That'd be down at 42.78. Still going to have to do some work on my average, it seems. The major point of interest is still a little bit lower. Down at the 490s. Crude oil just kind of ping-ponging back and forth inside here. It's not really doing much of anything. NASDAQ getting close. Modifying a little bit. There we go. So effectively, I'm eating the loss on the initial position to drive my average down to a monstrously favorable location. Oh, that bid flushed on me. That was not a great fill on that last one. A little bit past 10 o'clock, not really much else going on. The NASDAQ's just flushing down to major target areas. So far, the seller's still in control, which is why I'm mitigating with smaller scalps in between here. But did have to eat the initial portion of the loss just because of the way that it moved. The rotation point still on the 15-minute chart is a zone of interest, but obviously that right there is of concern. So I'm looking for the market to effectively just bounce back up to that point of interest where the longs will probably get greedy and try to hold out for longer. I obviously don't believe them, or I wouldn't have hit the E exits. But when we get that pulse back to the upside, sellers will very likely be looking to gobble those orders up. And here it sits. All right, well, good as time as any to roll over into the 10 o'clock point. The S&P still hasn't hit its objective to the downside, although it is getting a nice little corrective phase. I think the NASDAQ is probably just going to... Well, there is still some candle gapping to the downside, but that last bear bar filled in a lot of targets, so sellers are being treated very nicely at the moment. We'll see if they can rotate back a little bit further up and push back against this, but I'm still under the foot of the sellers, so still working on this point. Otherwise, though, we'll let this one go. The overall objective is back up into the 80s, which is quite a ways away yet, but at least back up into the 50s to retest that point of interest. Remember, that was the gap point and everything else on the first 5 minute. Probably still going to have to hang out for a little while, though, on this one. So, if I miss any questions, feel free to shoot me an email, jhb@ssftg.com, or you can post them in the comments below. Get them covered from there, too. Otherwise, though, enjoy the rest of the day. Hope you had a great morning, and we will see you all tomorrow. All right? Have a good one. We'll talk to y'all later. And for the rest of you who are hanging out in the extended session, just hang tight for a second, and we will rotate back over. All right. Have a good one. We'll talk to y'all later. Thanks.